Hi everyone, I am Dr. Soundararaj. I am very happy to interact with you all through this video. In this video, I am going to give my lecture on the meaning, features and importance of capital budgeting. These are all a couple of details related to my career. After you watch the full video, if you find the video beneficial to you, give a like to the video and do subscribe my channel. Meaning of capital budgeting. Capital budgeting is actually the process of making investment decisions in capital expenditure or fixed assets. A capital expenditure may be as an expenditure, the benefits of which are expected to be received over a period of time exceeding 1 year. Capital expenditure is one which is intended to benefit future periods and normally includes investments in fixed assets and other development projects. Capital budgeting is also known as investment decision making or capital expenditure decisions or planning capital expenditure. Therefore, I would very firmly say that capital budgeting is nothing but a process of making suitable investment decisions specifically on the fixed assets of a business enterprise. It is a technique by which every business enterprise is enabled to find out the profitability of the alternate projects available in front of them and choose the one which is more suitable to accomplish the financial objectives of the business enterprises. Let's look into the definitions given by few experts for the concept capital budgeting. Charles T. Holmgren has defined capital budgeting as what? It is long-term planning for making and financing proposed capital outlays. So he has very beautifully stated capital budgeting involves in long-term planning. Long-term planning for what? For making and financing proposed capital outlays. So it is the planning through which a business enterprise could make and finance the proposed projects or the proposed fixed assets they would like to buy. And that is what the meaning according to the definition given by Charles T. Holmgren. According to Philippotos, capital budgeting is concerned with the allocation of the firm's scarce financial resources among the available market opportunities. The consideration of investment opportunities involves the comparison of the expected future streams of earnings from a project with the immediate and subsequent streams of expenditure for it. Through capital budgeting, so through this process, the business enterprises find the ways and means to allocate their scarce financial resource among the available market opportunities. That means the funds available is a bit limited for every business enterprise. If they have abundant funds, definitely they have gone for over-capitalization, which will bring down their profitability on the whole. Therefore, every business enterprise should look at finance as a scarce resource. Then only they can find out the appropriate ways, profitable ways to invest the scarce financial resource in order to maximize its profitability. And that's what the idea given from the definition of Philippotos for the concept capital budgeting. Next definition is given by Richard and Green. They have defined capital budgeting as acquiring inputs with the long run return. Acquiring inputs, what they refer, acquiring the fixed assets or acquiring the capital projects which will have long run return. That means which will give return for a period more than 1 year. And that's what the idea behind the definition given by Richard and Green. Features of investment decisions. Capital budgeting decisions are essentially a long-term function. Obviously, we make use of capital budgeting technique to process our choices and choose the best choice which will have impact on the long run. Then second one is about huge funds are invested in long-term assets. That's the second feature of investment decisions. The third one is about the future benefits will occur to the firm over a series of years. The series of years what they refer, it's more than 1 year. So the benefit of today's investment will spread over a period which is more than than 1 year. The fourth one is about they involve the exchange of current funds. Exchange of current funds, what they refer is the investment the business has to do today to procure a fixed asset or to start a capital project. What for? For the benefits to be achieved in the future. So looking for the future benefits from a capital investment, business enterprises exchange their current funds, and that's what about the fourth feature. The fifth one is about they have a significant effect on the profitability of the concerns. Yes, profitable project chosen making use of capital budgeting technique will enable the concern to maximize its profitability in the future. If the decision taken is not a wise one, definitely it will have a greater impact on the profitability of a concern. The profit will come down in the future. The sixth one is about their strategic investment decisions. Yes, so it looks for a strategic fit between the investment to be done today and the returns which are aimed from the investments in the future. Seventh one is about their irreversible decisions. This is one of the very important features of investment decisions. Since the investments will have impact on the long run, reversing the decisions taken is really not possible. Even if it is possible, the concern has to incur a huge loss because of reversing the capital investment decisions already taken. Capital budgeting has a vital role to play in the broader process of strategic planning and budgetary control. Capital budgeting systems should strive to create an atmosphere which encourages the generation of new investment proposals and evaluate them as accurately as possible. So obviously, capital budgeting technique or systems, they strive to create a good atmosphere by which it encourages the generation of new investment proposals for the concern. From such investment proposals that are available in front of the concerns, they can do evaluation of them and choose the most appropriate and profitable investment proposal available for the concern. And that's what the greatest benefit companies or business enterprises derive using the technique named capital budgeting. Now, importance of capital budgeting. Capital budgeting decisions are among the most crucial and critical business decisions because these decisions will have greater impact on the destiny of the business enterprise because they only determine what amount of profitability the concern is going to enjoy in the future. Unsound investment decision may prove to be fatal to the very existence of the concern. A wrong decision taken through capital investments will definitely push a concern to closure. So the existence of the concern in the future will be a question mark if the concern has taken unsound investment decision. The first point of importance, large investment. Why capital budgeting is to be given greater importance? It's because huge investments are to be made by the concerns on the fixed assets or the capital investment projects. Therefore, the decisions are to be taken in a profitable way utilizing capital budgeting technique. Otherwise, the survival of the concern itself is going to be a question mark. The second one, long-term commitment of funds. Yes, the funds which are invested on the capital projects or fixed assets is going to be committed in the long run. Today's investment is going to be locked for more than 1 year. It's going to be for a few years. Therefore, the funds involved in capital expenditure are not only large but more or less permanently blocked in the long-term investment. The longer the time, the greater the risk involved. If the investment is blocked on an investment source for a long term, and definitely the risk involved is going to be greater. Because any concern will not be able to predict the future market conditions, the future economic conditions very accurately. In this situation, If the period of blocking the investment on a fixed asset is going to be longer, the risk involved in such investment is also going to be greater. That is why the decisions have to be taken very meticulously with regard to capital projects. Irreversible nature. Yes, that's the third point of importance. The decision once taken to invest the funds of the business enterprise on fixed assets or future projects, definitely it cannot be reversed without incurring loss. If the concern wants to reverse the decision, the only alternative will be to scrap the capital assets so purchased or sell them at a substantial loss in the event of decisions proved to be wrong. The fourth point of importance is complicacies of investment decisions. The capital budgeting decisions require an assessment of future events which are uncertain. It is really a difficult task to estimate the probable future events. Both returns as well as the length of the period over which they will accrue are really uncertain. So uncertainty of the future, it really makes investment decisions a complicated one, and that is why capital budgeting is really useful to keep a concern away from complications to a greater extent when they move to decide about investments on capital projects. Fifth one is about long-term effect on profitability. Yes, since the return from a capital project is going to spread for a period more than 1 year, the future profitability of the concerned business enterprise is determined by the decisions a business takes through capital budgeting techniques. And the next one is about national importance. Investment decision taken by an individual concern is of national importance, because it not only influences the profitability of the concern in the future, it also determines the employment for people in the society, the economic activities of the industry and the country, and on the whole, the economic growth of the country is also greatly determined by the investment decisions taken by every business enterprise in a country. I hope I have done my explanation on the meaning, features and importance of capital budgeting up to your level of satisfaction. Thanks for watching this video. I'll meet you in another video. Bye for now, everyone.